Welcome back to our YouTube channel. Our topic for today is what is contract specification and how to read it. Now, when we trade a futures contract, the first thing that we need to understand or we need to analyze will be this, what we call as contract specification, or sometimes we call it as contract spec. So this contract specification is like a user manual as a layman perspective. So for example, if today I bought a phone, I don't know how to use this particular phone, I can start to flip the user manual. So the user manual will start to define what is the spec of this phone itself and how do you use it. So the same thing, even you're trading Malaysian market or in future you're going to trade any foreign futures contract, the first thing you need to take the contract specification and start to read it. So don't worry, unlike our user manual, which is very lengthy, this contract specification on average is about half page of an A4 size. I repeat, it's about half a page of an A4 size. The rest is not so important. So later I'm going to run through which part of the contract specification is important and how do you read it and how do you understand it. So technically, it's less than about 5 important items. If you read through all the contract specification, more or less, they are the same. So later, let us run through some of the example of the contract specification that you're going to trade, and via this contract specification, you will understand in future, if you are going to read a contract specification, how do you read it? Now, before I start, as usual, if this is your first visit or this is your first video via our channel, please remember to subscribe to our YouTube channel and on your notification bell. My name is Ting Ting. Before I start, as usual, we need to start with the disclaimer. Now, this particular video is only meant for education purposes only. There's no buy or sell call. Now, what is contract specification? As usual, this contract specification is something like an agreement, a standard agreement. So for example, if today I want to buy a house, I need to sign an S&P agreement. Am I correct? I need to sign an S&P agreement. So in this particular S&P agreement, it defines how big is my house, where's the location, how much is it, etc. So when it comes to futures, because futures is a contract as well, it's like we need to sign an agreement, but it's just that this agreement is a standard agreement, meaning it doesn't matter whether I sign with person A or a person B or a person C, I'm going to sign a standard agreement. So everything about this product itself is being defined in this contract specification. So I repeat, this contract specification as a layman terms is like a user manual, which I always use these particular terms, a layman terms called user manual, because everything about this contract itself is being defined in this contract specification. It's like our user manual define what is that particular products about, and the same thing for futures itself. First thing, if I want to understand what is this futures contracts about, first thing I will need to take the contract specification and I will need to read. So that's the first step that we need to know. So the second step that we need to know is, where can I get this all contract specification? So as usual, you can get it via Bursa Malaysia, which is one and only exchange in Malaysia. So technically, you go to bursamalaysia.com, then you click on trade, then you click on derivative. So I repeat, you go to bursamalaysia.com, you click on trade, you click on derivative, then you can get all the contract specification, and all the contract specification is available in different languages, for example in Bahasa Melayu, in Mandarin, in English as well. So if you're familiar with any type of the language, you can go and check it out via that particular language. They did a translation for different type of languages as well. Now let's run through the English version. So this particular contract specification, I screenshot via just now whatever the bursamalaysia.com, I screenshot via that. And I'm going to highlight those important parts that you need to interpret or you need to read it. For example, now can you see that it's very short? It's about less than half a page of A4 size. Then you can see that we are going to start with the first one, which is the contract code, for example, which is your FKLI. So we call this in short form called FKLI. And the underlying instrument is like our mother, our parents, because we derive from our parents. Futures products itself is a derivative products. I'm so sorry. So it's a derivative products. So we derive from the underlying market. So the underlying, which is our parents, so it's FBM KLCI. So we need to know our underlying, because how the underlying move, it will affect us as a futures, because we are kids. So for example, our parents, they have certain characters, so we will inherit their characters as well. Then you can see that this contract size is every 1 point is equivalent to 50 ringgit Malaysian. So in another words, meaning that if the market move up 1 point after I bought, I'll get 50 ringgit Malaysia as my profit. If it moved down 1 point from the price that I sold, because futures I can start by selling. If I sold, which is I shorted the market, if the market moved down 1 point, I'll make 50 points of profit. So every point equivalent to 50 ringgit Malaysia. Now, the next thing, the most important things, but some of you might not really understand, is what we call as contract months. So contract months meaning that the months available for you to trade. I repeat, these contract months, in short, they are the contract months available for you to trade. So based on this contract specification for FKLI, it defined as the contract months available for me to trade is spot month. Spot month meaning the current month, then the next month, the subsequent month, and the next 2 calendar quarterly months. So these quarterly months, they are March. Can you see that? March, June, September, and December. So I'm going to show you some example, then you'll be able to understand better about these contract months. Now, let me show you one example. Let's say, for example, today is 1st of February 2022. So if you, according to the contract specification defined here, which is your spot month available, so if February, spot month will be February itself. Am I correct? If today is 1st of February, so spot month is the current month, which is February. The next month will be what? Your March. Subsequent month, then your 2 calendar quarterly month, which is your June and September. Subsequent 2 months. So it will be your June and September. Let's have a look. So if today is 1st of February 2022, you can see that your spot month is February, your next month is March, subsequent 2 months, 2 quarters will be June and September. Very simple. So these are all the 4 months available for you to trade only. Technically, for retail, you are going to trade the spot month. You don't need to memorize. Just in short, if you do not want to memorize, you look at the highest volume, you trade for that particular month, you will not be too wrong. I repeat, you trade for that particular month, the highest volume, you will not be too wrong. Now, some of the videos we did explain why you're trading this month, not that particular months. You can refer back to the previous video as well. Now, this is the actual trading platform. Can you see that these are all the 4 months available for you to trade on it? February, your spot month, your next month, and your next 2 calendar month, which is June and September. That's it. And can you see that the spot month is the highest volume? So as a retail, you trade for this particular month, you will not be too wrong. So this is the first part that you need to understand. Now, the next example. So we can see that the 1st of February, our February month is the spot month, or sometimes for you as a layman terms, you can, another words that we can say is the current month, or is the first month. Then the March will be the second month. So we always trade the first month or the spot month. Now let's say, for example, if today is 1st of March, so what are the months available, contract months available for you to trade? Then you refer back again, they are available for your spot month, next 2 quarters. So I give you 1 second. Get the answer, or give it a pause while you're watching the video, get the answer out before you look at my answer. So again, if today is 1st of March, my spot month will be March, next month will be April, next 2 quarters will be June and September. Can you see that? So very simple. So my March will be the first month, or what we call, according to your contract spec, is your spot month. April is your second month. Then subsequent 2 quarters will be June and September. So always as a retail, you trade the highest volume month, which is the spot month. Now, the remaining one, they are not so important. The last two more important one is your trading hours. Another one will be your final trading day. Now, let me explain to you the trading hours. So technically, we have 3 different trading sessions. Now, what are the trading phases among these all sessions? You can refer back to our previous video. Our previous video, we define the different trading phases. But today, I'm not going to run through these. Just for understanding, the general 3 sessions, we have morning trading hours, which compared to your stock market, for futures, we open 15 minutes earlier and we close 15 minutes later. This is meant for those who are doing their hedging, because futures mainly is for people to do hedging, but actually we can use it for speculation as well. We can use it for arbitraging as well. We have different ways of using it. But in other videos, we're going to talk about this, but today let us focus about the trading hours. So morning session, we open 15 minutes earlier compared to your stock market. So stock market open at 9 o'clock, we open at 8:45, and the market closed at 12:45, and which your stock market actually closed at 12:30. Am I correct? So it closed 15 minutes later as well. But afternoon session, they open at the same time, which is 2:30, but they close 15 minutes later, which is at 5:15. Now, we do have night market as well. Since December 2021, Bursa Malaysia Derivative introduced the night trading session, which is we have 9 o'clock until 11:30 p.m. But normally for retail, if you do not want to trade during these particular hours, it's okay, because the volatility might not be that high, and the market what we call as the market liquidity might not be that high as well. Now, the next part that you need to understand is minimum price fluctuation. Minimum price fluctuation meaning that whenever the market moves, it needs to move by at least 0.5 points. So for example, if right now the market is at 1,005, so the next will be 1,005.5, then 1,501, 1,501.5, 1,502. It can't be 1,501.1. So every time when the market moves, it needs to at least move by 0.5. So since 1 point is 50 ringgit Malaysia, so automatically half a point is definitely 25 ringgit Malaysia. Now, the last one that you need to know, as I mentioned to you, only less than 5 items that is important or relevant to you. The last one that you need to know is the final trading days. Normally is on the 30th or 31st, or if it is a February, is either 28th or 29th of February. So on the last trading day itself, if you not yet close your position, your contract will be auto cash settle. Can you see this is cash settlement? It's not physical delivery. So any differences you pay by cash will do. So about this final settlement value, in our next video, we'll try to explain to you how to calculate the final settlement value, because this final settlement value itself is a big topic by itself. So if there's any opportunity, I'll cover about this. So that's it. So this is as simple as that. Not many things that you need to understand. Once you can understand one contract specification, you duplicate for the rest of the contract. You duplicate for different products, different futures products as well. Now I'm going to show you another example so that at least you can understand better about this contract specification. Now, the next products, the commonly being traded products by retail will be these FCPO, our crude palm oil futures products. So the same, the contract code will be F, and anything start with F is our futures itself, so it's our FCPO. So the underlying instruments, the parents is the crude palm oil, those who are trading crude palm oil or transacting their crude palm oil outside. And the contract size, this is equivalent to your FKLI. So just now FKLI, 1 point is equivalent to 50 ringgit Malaysian. So for this, the FCPO, So technically, for your understanding first, is 1 point equivalents to 25 ringgit Malaysian. Because every contract is equivalent to 25 metric tons. So we need to times with this 25. So every time when the market move, if it up by 1 point, then we are going to make a profit 25 ringgit Malaysian. I explained to you in a short while about this. And the next thing, before we come back to the contract months, the next thing that we are going to look at is your trading hours. Unlike your FKLI, FCPO, they do have their own trading hours. So the same thing, we have morning trading session which start at 10:30 and they are going to close for midday break, 12:30. Afternoon session is 2:30 until 6 p.m. So you can see that the trading hours is quite different from your FKLI. Then we have night market as well, night trading session as well from 9 p.m. until 11:30 p.m. Now, coming back to this contract size, now just for understanding, can you see that this is your contract size 25 metric tons? So anytime you need to times with this 25 metric tons. So this price quoted is only for 1 metric tons is equivalent to 3,000 plus, for example. So if the market move up by 1 ringgit Malaysia, you need to times with 25. So technically, can you see the comparison? FKLI with times with 50 ringgit Malaysia, FCPO with times with 25 ringgit Malaysia. So very simple, if the market up by 10 points, you take 50 ringgit Malaysia times 10 points for your FKLI. If for FCPO, the market up by 10 ringgit Malaysia, let's say I bought at 3752, the market went out to 3762, so I just need to take 10 ringgit Malaysia times with 25 metric tons. So another example is if I want to calculate the whole contract value, I need to know exactly how much is this contract value. So what I need to do is I take 3752, the last time price, times with 25 metric tons. Can you see that? So I know that actually for example, at the price of 3,752 ringgit Malaysia, actually the whole contract value worth 93,000 because each contract actually carries 25 metric tons. For those who do not understand how heavy is this 25 metric tons, converting to something that you can understand like kilogram, it is equivalent to 25,000 kilograms. Easy? Now, the last one that we need to understand coming back is your contract months. Again, compared to FKLI, contract months available for FKLI, only 4 months that you can trade. But for FCPO, you can see that you can trade many months. You even can trade 3 years in advance because FCPO mainly they are using it for hedging purposes. So sometimes you need to hedge ahead. So you can see unlike FKL which we have only 4 contract months to trade, for FCPO we have many contract months to trade. For example, we have spot month and we have next 11 succeeding months. Then meaning your current month, then subsequent 11 months, many months. Then thereafter, alternate months meaning your January, then you skip February, then March, May, July, September, November. Then again, January, March, May, July, September, November. That's it. Now, for example, if today is 1st of February, my spot month is February, then subsequently you follow 11 succeeding many months. So you can see that many months that you can trade. But again, for retail, you don't trade spot month. Unlike FKL, you don't trade spot month. FCPO, you trade the 3rd month. What are the reasons? You can refer back to our previous video. So you just need to remember. If you cannot remember, just go for the highest volume and you trade for that particular month. You will not be too wrong because of liquidity. So you can see this is the actual screenshot. Actually, there are still many months, but even I can screenshot, I cannot paste it in one page. So no point. So actually you can see that February is your spot month. There's 11 succeeding month. You can see that many months that you can trade. Then subsequently you can see that it's alternate month. Many months that you can trade. And the 3rd month always will be the highest volume. You trade for that particular month, you will not be too wrong. So I hope that this contract specification interpretation will help you to understand better about when you are going to start trading in any futures contract. First thing, remember, take your contract specification and start to read. And all the contract specification is available in respective exchanges. So for example, if I'm going to trade for CME, the Chicago Mercantile Exchange, I go and search for that particular products, and I go and search for CME, I will able to get the contract specification. And you can see that whatever contract specification, right, is about 5 items that they are very important. The rest, like FCPO, they have their delivery ports, their delivery grades, but this is not necessary or it's not relevant as a retail traders. It's not relevant for you as a retail traders. You just ignore it. Just highlight those important parts. So just now, whatever I screenshot, they are the important parts. The rest, you don't need to run through. Okay, so I hope that this particular discussion about this contract specification will help you to understand better. But if you have any question, you can put in your question in the comment box. We'll try to answer your question. Now, before you go, remember to subscribe to our YouTube channel and on your notification bell. Don't forget to give us a thumbs up. And I'm going to see you in our next video. Bye bye.